Welcome to the Property Elite podcast. I'll be your host, Jen Lehman, chartered surveyor and co-founder of Property Elite. Stay tuned each week for more on industry hot topics, market updates and new RICS guidance. In this week's podcast, I take a look at environmental, social and governance, ESG, and how it's measured. ESG is becoming an important corporate and investment requirement, so all APC and AssocRICS candidates need to be aware of it, particularly in relation to the sustainability competency. So what is ESG? In RICS's draft guidance note, Sustainability and ESG in Commercial Property Valuation and Strategic Advice, currently under consultation at the time of recording this blog in December 2021, ESG is defined as the criteria that together establish the framework for assessing the impact of the sustainability and ethical practices of a company on its financial performance and operations. ESG comprises three pillars: environmental, social, and governance, all of which collectively contribute to effective performance with positive benefits for the wider market, society, and world as a whole. Although ESG principally refers to companies and investors, ESG-related factors are also used to describe the characteristics and, where relevant, operation of individual assets. So ESG is a natural progression from corporate social responsibility, CSR, and reflects an increasing requirement from financial institutions and investors for ESG factors to be reflected in decision-making and performance metrics. It's also partly a response to COP26 and the UK government's 2050 net zero carbon target, as well as helping to build resilient, future-proofed investments. Research by Fidelity showed that the application of ESG principles to specific assets within their portfolio during the COVID-19 pandemic performed 10% better. So, what are some of the principles for responsible investment? These were created to help implement ESG into investment decision-making and reporting. Principle 1. We will incorporate ESG issues into investment analysis and decision-making processes. 2. We will be active owners and incorporate ESG issues into our ownership, policies, and practices. 3. We will seek appropriate disclosure on ESG issues by the entities in which we invest. 4. We will promote acceptance and implementation of the principles within the investment industry. 5. We'll work together to enhance our effectiveness in implementing the principles. And 6. We'll each report on our activities and progress towards implementing the principles. ESG is measured using a wide range of rating systems. Some of these include BREEAM, B Corp, CPACE in the USA, Dow Jones Sustainability Indices, the Energy Conservation Building Code in India, the EU Taxonomy, the FTSE4Good, the Global Real Estate Sustainability Benchmark, GRESB, ISO 14001, LEED, the Minimum Energy Efficiency Standard, the MSCI ESG rating, NABERS in Australia, the Standard & Poor Global ESG scores, the Task Force for Climate-Related Financial Disclosures, and the UN Sustainable Development Goals. So how can ESG be reflected in property valuation? The new RICS guidance note aims to tackle the challenge of how ESG is reflected in valuations. This sits alongside the updated 2022 Red Book Global, which includes amendments relating to ESG and sustainability factors in valuation. RICS states that, while valuers should reflect markets, not lead them, they should be aware of sustainability features and the implications these could have on property values in the short, medium, and longer term. This means that valuers need a strong working knowledge of ESG and sustainability and their impact on value. Examples of this include physical characteristics of buildings, policy, legislation, risk, obsolescence, capital expenditure on maintenance of the asset, and market demand. RICS further states that particular care should be taken when assessing or commenting on sustainability and environmental, social, and governance factors, as valuers may not have the specialist knowledge and experience required. In appropriate cases, the valuer may recommend the making of further inquiries and/or obtaining further specialist or expert advice in respect of these matters. Thanks for listening to the Property Elite podcast this week. Head to our website to check out our full blog, free and paid support resources and services, free consultation for every single RICS APC and AssocRICS candidate, and also ask us any questions you have via the website chat blog. See you next week.